So it's as simple as that. So once you know this rule, then you can actually apply this, what we call line drawing, right? So I'm going to share with you how you actually draw lines as well. Do you see a resemblance? Now this is actually something similar to this one that I actually talked about. In a chart, you want to be able to see patterns, recurrences, same recurrences, right? Same recurrences typically in terms of price line. Price. This is the more recent, this is the past. This is how to read the chart, right? The older it is, the less relevant it is. Don't you see in the recent time, this $81, there's a lot of reaction. Can you see it? Come to 81 point, right? Come to 81 point again, right? Come to 81 again. Oh, of course, this one is a very nasty candle. I'm just showing it as an example, right? But it still hasn't broken. Okay, so you know that this 81 has got something we call pattern there. There's a pattern for it to make sense. Every time the price comes to 81, somehow there are investors and traders pushing the price up, buy up. Every time coming down, buy up. Doesn't break 81. Right? So there's a common term that we always use. We say this is support. Okay, so when we draw this line, we call this a support line. Right? Now, do we also see another commonality here? Every time it comes to 85.5, sell down. Trace back again, 85.5, sell down. Trace back again, 85.5, sell down. 85.5, sell down. Is that a pattern? Do you see a pattern that I see? That's how you do technical analysis. It's as simple as that. So the better you are at spotting this kind of shapes, the better you will be able to get. As simple as that. So this is what we call resistance. So once there are and in technical analysis, there are a couple lines that we draw, right? Typically we draw trend lines and support resistance. Now then we can actually start to see whether there's a pattern for us to trade. And when we trade, what kind of trading plan we want to put in, what kind of sizing we want to actually buy and sell. It's as simple as that. Okay? But today, because we are having a 3-hour only, I won't be able to go through everything with you. Yeah? But this is actually as detailed as possible. Alright? Any questions so far?
So you use only price action only, huh?
Yeah.
Okay.
Price action is actually the fastest reactive. Indicator is always 3 to 7 days slow.
Yeah, slower.
3 to 7 days slow. When it actually tells you there's a buy signal, you buy and now it's already halfway. Right? So price action, when you look at the candlestick pattern itself, that's reacting is the best for it. But some people don't like it because you have to look at this. Right? You always look at all these funny shit. But that's how it tells you, market turn. How fast market turns. It's actually based on the candlesticks. You wait until the indicator tells you, the lines cross, this is actually maybe 3 to 5 days.